There's so much money out there. If people panic, if Bank of America were sacrificed at the altar, and I could see that happening, I truly could. I mean, maybe there is no coincidence that Warren Buffett just wanted to make a profit and he's pulling out. He still has a big position there, but the point is, they're the ones who've had the big gold and silver short, according to Ted Butler, for a long time, 1 billion ounces of silver. If a bank like that failed and was bailed in, the amount of panic that would ensue in a matter of moments would necessitate people reevaluating their lives, reevaluating what they think is safe. And when a major commercial bank, if indeed something like that happened, we're bailed in. Most people don't even know what bail in is. The amount of demand into the precious metals market in one day would wipe out availability across the United States in one day, just like that.
Events that, maybe rattled the market a little bit. So our stock was, underperforming the market compared to our peer group for, really about, 3 or 4 quarters, which was a little bit distressing. And so I decided to put the share purchase program back in place. We had it in place before, but we hadn't renewed it. But I decided to renew it. And we actually threw some bids into the market to buy some stock. And then all of a sudden the stock took off on us. And now the stock is up, 30% or something in the last, 4 weeks or whatever it is. I have to do the math exactly, but it's performed quite well, over the last few weeks. And so we haven't bought any back, but it's there. If we see any weakness in the stock, we'll definitely be in the market, buying back shares, and I'm happy to do that.
It has broken enough stuff in the stock market to indicate that asset category is now shifted to a negative long-term status, which is opposite to the major trends of gold and silver. They tend to be opposite. So if you look back and say, well, if the banks are going to crash again, wouldn't silver and gold crash? Well, go back and look at what happened in March through May of last year when the banks dropped 34%. I'd see, where are my numbers here? Gold was jumped to $250 in the same time period, and silver went up $7. So it was totally beneficial to them. So I tend to expect that same response this time around in the monetary metals once the banks are triggered. So it's something to watch, especially starting next week.
First Majestic Silver has recently acquired Gatos Silver in a stock deal valued at $970 million, bringing together 3 top-tier mining projects in Mexico, Santa Elena, San Dimas, and Gatos. Each of these mines produces around 10 million silver equivalent ounces annually, which will boost First Majestic's total production from about 21 million ounces today to around 31 to 32 million ounces by 2025. This increase will strengthen the company's position as a leading silver producer and offer significant value to shareholders. The combined company will produce about 51% silver, with the remaining 49% made up of gold, lead, and zinc. The expected all-in sustaining costs are projected to be between $16 and $18 per ounce, reflecting improvements in cost management after resolving recent challenges like water shortages and labor issues at some of their mines. First Majestic is focused on exploring and expanding its mining operations with active drilling programs aimed at increasing the life and output of its mines. In addition to growing its production, First Majestic is also taking steps to improve its financial position. The company has introduced a share repurchase program to take advantage of what it sees as undervalued stock prices, showing confidence in its future. Furthermore, First Majestic is exploring the potential restart of its Jarrett Canyon gold mine, but it plans to proceed cautiously to ensure the mine's long-term success. First Majestic is also unique in the mining industry because it operates its own mint, turning silver from its Mexican mines into retail products for sale directly to consumers. This mine-to-mint approach allows the company to bypass traditional markets and offer silver directly to end users. With these combined efforts, First Majestic is well positioned for continued growth and success in the silver and gold markets. Now we'll show you the best clip of the latest Neumeyer interview, but first, smash the subscribe button, turn on notifications, and share this video with a silver bug. Enjoy the episode.
how all the BRICS nations countries are accumulating lots of gold in those that are tied to Project Enbridge. Well, no doubt, and we've talked about why they've all been bringing it back and why they've all been buying. We find Saudi Arabia, who's straddling the line here, accumulating 160 tons of gold. Well, who cares, right? Well, the people care because they didn't report it through the normal chains, like through the IMF, and instead it was the Swiss import-export numbers that flagged it. They're straddling the line. They've become full participants in Enbridge, but kind of hedging about their full participation in BRICS. They don't want to upset the apple cart, but the apple cart is going to turn upside down very soon. I did an interview yesterday with a guy from the UK, and he said something really interesting, and I thought about it. And I just wanted to throw it out there because I think it's fascinating when you think about, I've done these little comparisons for years. I've talked about the house price in 1960 versus today. I've talked about, back in 33, the cost of a men's suit with a $20 gold piece or a $20 gold certificate. But he said to me that in the United States, that the money printing, which is inflation, an increase in the money supply, takes, due to the Cantillon effect, it takes time for it to work its way through the system. But an increase in the money supply is what causes price inflation, by and large. And he said, the money creation in the United States has averaged roughly 7% for the last decade. Okay, that's the average. Well, the law of 70 seconds says what? You take the interest rate and you divide it into 72. It tells you how long before your principal doubles. Or in this case, if inflation or money creation is running at 7%, our currency has been cut in half in value over the last 10 years. And if what he's saying is true, that is a true statement. If he's saying 7% by and large money creation, and I think, what's his name? John Williams might say that's even underestimating, but let's just go with it for a moment. And so we talk about gold, and a lot of the financial advisors who will listen or talk to people who have portfolio in gold. Well, why would you own that? No interest. It's a positive real yield on the 10-year treasury right now in the 6 months. For goodness sake, they don't know what they're talking about, because not only has it outperformed the 10-year treasury for the last 25 years, but here's a cool little experiment. You see, if this is my mug, this is an ounce of gold, even though it's an ounce of silver, and it's hanging on the bathtub, and the water drops out from under the bathtub as you pull the plug. Gold didn't go higher, the water went lower. And that's what I'm saying about the currency here. It's not that gold is going to make you wealthy. It's that it maintains your lifestyle or your standard of living. And let me paint the picture. So if indeed what he is saying is true, over the last 10 years, 7% into 72 would tell us 10.2 years, currency's been cut in half in terms of its purchasing power. Okay, if that's the case, what has gold done? Go back 10 years, gold was $1,200. What's it today? $2,660. It's gone up more than double. So it's retained its purchasing power, not by, it hasn't made you wealthy. It's gone up a little bit higher than the dollar has fallen. And so that's the whole idea with buying gold and silver. When I talked about it is wealth, it's not about becoming wealthy. It is wealth. Yeah, it's outperformed a lot of investments, and it's done very well, but it's only just really kept up with the falling of the dollar. And I just want people to understand that as we talk about gold and silver, as I always talk about it, that's really where I'm coming from. And I think it's an interesting way to look at it. And you go back, look at the price of a house in 1960 versus what it is today in the number of ounces of gold. You go back to Roman times, you go back as far as you want, and it's the same thing. So,
in today's news recap, Samsung's silver battery revolution, faster, longer range, cheaper. A groundbreaking new report from the Silver Academy has unveiled the potential of Samsung's silver solid-state batteries to revolutionize the transportation industry and drive a significant increase in demand for silver. The report estimates that the widespread adoption of this technology could lead to a surge in silver prices and reshape the global silver market. Samsung's silver solid-state battery technology offers several advantages over traditional lithium-ion batteries. Reduced weight, simplified material requirements, potential for lower costs as production scales up. The applications of silver solid-state batteries extend beyond passenger vehicles. The adoption of silver solid-state batteries across various transportation sectors, including cars, trucks, buses, vans, ships, barges, ferries, yachts, and airplanes, could create a massive demand for silver. The report estimates that the annual silver demand could increase by up to 25,400 metric tons if a significant portion of these vehicles adopt this technology. Such a significant increase in silver demand could have profound implications for the silver market. Rising prices, silver prices are likely to experience a substantial increase as demand outpaces supply. Increased mining activity, the silver mining industry would need to expand to meet the growing demand, leading to increased investment and job creation. Recycling opportunities, recycling silver from decommissioned batteries could become a crucial industry to support the sustainable use of this resource. The current annual global silver production is approximately 25,000 metric tons. If the estimated increase in demand due to the adoption of silver solid-state batteries materializes, it could represent a 101% increase in silver production. This would put significant strain on the existing mining infrastructure and potentially drive up silver prices. Samsung's silver solid-state battery technology has the potential to transform the transportation industry and drive a significant increase in demand for silver. As the world transitions to electric vehicles and other forms of sustainable transportation, the silver market is poised for a period of growth and opportunity. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button, hit the like button, and turn on notifications so you do not miss out our daily recaps.
970 million US dollars in shares of First Majestic. Gato shareholders end up owning 38% of the combined company, which is a great thing for both shareholder groups. And it combines three world-class district scale mining projects in Mexico. The Santa Elena, which produces, a little around 10 million thereabouts ounces of silver equivalent, of which about 70% of that is gold and about 30% of that is silver. And then San Dimas, which is another, long-standing world-class mine in Mexico as well, 50% gold, 50% silver, also producing around 10 million silver equivalent ounces. And then with Gatos, around the same number. It's actually a little bit bigger, but with the joint venture, we're getting 70% of that production, which is just shy of about 10 million ounces as well. And about 70% of that is silver. The rest is in the form of lead and zinc. So we'll end up having three world-class projects under our umbrella, all of which are producing around 10 million-ish silver equivalent ounces, taking our production up from around today, about 21 million annualized silver equivalent ounces to about 31 or maybe 32 million silver equivalent ounces in 2025 upon closing. So it's pretty exciting for both shareholder groups. Gatos has obviously performed quite well over the last 12 months, and First Majestic has underperformed slightly, as which we can talk about if you wish, but I think it's a great transaction for both companies.
Yeah, and Keith, obviously there were a few big components here.
Okay, we never stop, and obviously we know the silver space extremely well. We know Mexico better than probably anyone. We've been in Mexico for 21 years now. When I put the company together, and we're a pretty big player in Mexico, so we know the Mexican landscape extremely well. And this asset we've had our eyes on for some time. When it became available earlier this year, it went through a process. The banks got involved, of course, you can imagine. And they had their advisors on their side, and we had our advisors on our side, and there was a whole group of other companies participating. It was a very competitive process that lasted, several months, and came to the end when it was news released, and we ended up being on top of the bidding process, which is good to see. But it was quite competitive, and it was an open bidding system, and nevertheless, you talked about exploration. Now we look at Santa Elena very much the same as San Dimas, or pardon me, as Los Gatos, because Los Gatos is 103,000 hectares in size. It's a district scale, huge property, very, very underexplored. And then you look at Santa Elena at 102,000 hectares in size, which when we bought it back in 2015, it was producing 3 million ounces. Today it's producing almost 10. And that was all through exploration success. And still a small portion of that property has been explored. So we have 9 rigs active right now at Santa Elena, and there'll be a similar number. I think that there actually is currently a similar number of rigs at Los Gatos. So, they're taking their exploration projects very seriously, as we are within First Majestic. And both of those mines are expandable. And I think the life of mines over the next, 5 to 10 years will be expanded substantially as a result of exploration success.
And
yeah, so right now, First Majestic had 43% silver. The rest is in the form of gold. On a combined entity will be 51% silver, and the 49% is broken up between gold and lead and zinc. The lead and zinc is, maybe 20%. The other, whatever the number is, it's 29 or whatever works out to is in the form of gold. And on a cash cost basis or an all-in sustaining cost basis, we do ramp down a little bit. We have seen elevated costs over the last 12 months at La Encantada and San Dimas, and this is well documented. We put a lot of news out on this because we have seen these elevations, and the water situation that we had at La Encantada drove costs up there, which has now been resolved. So you'll see in Q4 the cost of La Encantada coming down. Some of the labor issues we've had at San Dimas have also elevated costs there as well. That normally produces ounces in the 14 to 15 level. It's been higher in the 18 level over the last 12 months. And then with Gatos coming in, it's in the 16 level. So, all in, a combined entity. Now, of course, we have not put out our 2025 guidance yet, and both companies, Los Gatos and First Majestic, are still in our budgeting process for 2025. But we're expecting, all-in sustaining costs in the 16 to 18 range next year.
In today's news recap, silver is playing catch up, but is still more likely to be weighed down by CTA selling activity over the coming week. TDS senior commodity strategist Daniel Gali notes, silver fundamentals remain strong. Our simulations of future prices continue to point to negative asymmetries in positioning risks over the coming week, with a big uptape required to prevent CTAs from returning to the offer. Under the hood, this suggests that uptrend signals are naturally deteriorating, and in contrast to gold, Shanghai traders are now adding to their shorts following significant long liquidations that have greatly reduced the top traders' net position. Silver fundamentals remain strong, with solar capacity still beating expectations, and sentiment surrounding industrial demand may be overly pessimistic, but the scope for a significant reversal in sentiment to drive prices higher is mitigated by the recent rise in the free float and the pessimistic outlook for algo flows for the time being. Now, we'll show you more clips of the latest interview, but first, hit the like button, subscribe to the channel, and make sure you share this video with a gold bug, as more people need to know this. Let's get back into the episode.
Or just sentiment in the stock market. Remember that's moved a lot by sentiment, not just so much data points, but I'm sure data points would be affected. I mean, if you're running a company and you have economic data points that are coming down, and you're not an economist, but you run your company, and you're either going to hire new workers or lay some off or not hire anymore or cut your production capability or not build a new factory, et cetera. All these variables outside that we're talking about, like, political uncertainty, data points that are getting worse, will cause you to have an economic consequence. down the road if these things started to happen. So yeah, it could be. But I think the main thing is the emotional impact on voters who, when they're in the stock market, you don't want to have some dark cloud out there that is uncertain in terms of its wave effects. What do you want to do? Well, you want to stay speculatively long, or do you want to lighten up your portfolio and go to cash or go to bullion? And this is a variable, I think, that would assist the monetary metals again, because as you enter a period of uncertainty, this is also a factor that would impact the Fed decision. Oh no, they don't talk about politics. They swear that's true. Okay, but uncertainty caused by politics and its impact on economic data points, they'll be fully aware of that. And so if the Fed starts panicking because the bank sector starts to break in the next week or so, that's just the beginning. Sentiment can go from light to dark overnight. And suddenly, if you have a fear factor, what are you going to buy? And I suggest to people that they stand back and, silver's weaker than gold now. Yeah. And we think that's caused by the stock market break recently. Well, we argue not. We think it's just the silver behaves like a wild dog. But look at the other variables out there that if they engage and you want a sense of certainty in your life, what do most people want to get into? Well, look at the portfolio action of like Newmont Mining. Stanley Druckenmiller back in mid-February probably laughed by other asset managers when it had bought a ton of Newmont Mining, and dumped a bunch of big name tech stocks. But it was a little early. The market didn't top out then. It was February, March. Market didn't peak till last month. So he probably missed something on the tech stocks. But he bought Newmont Mining around $32. Right now on a dip, it's at 47. How come it's doing so well? If the stock market's starting to wobble, how come Newmont's hanging around its recent high, which is dramatically off its February, March low? It's a blue chip, the big blue chip. How come gold's hanging around quietly, 1% off its all-time high weekly close? Somebody's buying it. So, and I think part of the reason for that is not just foreign governments we know are buying gold, but I think there's a rise in domestic consumption of that too, where there's a sense of uncertainty. And asset managers here are looking for something that isn't going down. And if you start to break the stock market more and more of them will start to look for something that isn't going down. Doesn't have to be going up, just look steady. And T-bonds are one of those that we called recently. Sharp upside there, drop in yields on the long dated end of that market. And the monetary metals, I think, are hanging in tough, except silver's the wild dog, of course. But I think that as these events start to unfold, that's where money's going to go. And so it's hard to calculate what that political variable is. But it's got to be, I think it'll be net positive for gold and net negative for certain other assets.
Where can
more toward investment grade timing. So we didn't suggest you buy silver at $30. We suggested on the recent upsurge, if you weren't already long gold from much lower levels in silver, that when it came up through 25, annual momentum said, okay, if you're not in, you need to get in here. Not at 32 at the recent high. Okay. So yeah, it's well off that recent high, but it's still above that point of breakage, and gold is well above it. So we focus more not on short-term swing trades unless we think they're really significant and lasting. They're going to generate some long-term move. We're focused more on the long term of the major markets right now, because I think right now what's going on is the resolution of an already ongoing monetary metal bull market. It is likely to be quite dramatic in terms of what happens to the upside in the acceleration phase of those markets.
Wow, what an episode today. Keith Neumeyer really brought the heat with his deep dive into First Majestic's game-changing acquisition of Gatto Silver and the fresh share buyback program. His breakdown of why the company is betting big on these moves really struck a chord with many of you out there. It's not just about numbers, it's about strategy. And Keith laid it all out, showing how First Majestic is stepping up their game and making bold moves to dominate the silver space. Thanks for tuning in and sharing your thoughts. Keep the conversation going in the comments below. What did you think of Keith's insights? Are you on board with First Majestic's big plays? Don't forget to like, subscribe, and hit that notification bell so you don't miss any future updates. Catch you on the next one.